Hello everyone, this is Lien coming to you from the CME NYMEX floor. One of the big stories in the FX market today was the euro. The euro U-turned for a move that took the pair right to 114. And today's moves in the euro were quite interesting because, first and foremost, after yesterday's lively session for the currencies that saw the US dollar fall sharply against all the major currencies and the euro shot higher, we actually did not see continuation in Asia, Europe, or the start of the North American session. The reason for that was because the euro was hampered by concerns about auto tariffs. There was some talk that they could be hit by auto tariffs by Christmas, which would be sooner than most anticipated, and certainly shows the resolve of the U.S. administration. That prevented the euro from really extending its gains during the European session. But when we talk about this U-turn, what happens is that these days it's all about news bombs. What happened was the European Commission came out, they denied those reports, and the euro reversed. It started to move back in the direction that it had seen yesterday. So it came off of a low of 113.50 and touched a high of 114. The move that we saw recently in the euro has taken the currency above the 20-period SMA. So what that means is that we could actually see a further extension, possibly a move to 114.50, 115. Aside from the relief that the Eurozone isn't going to be immediately hit by auto tariffs, we also had better than expected economic data. German labor market numbers were stronger. We also saw the confidence numbers for the Eurozone improved. Now, of course, the Eurozone economy itself has its own troubles, and there's clearly an easing of momentum. But the fact that we see fresh easing of economic momentum in the U.S. coupled with what seems to be a shift in stance by the Federal Reserve means that the U.S. dollar could underperform at a faster pace than the euro. Because one of the big stories this week was that Fed Chair Powell kind of shifted gears and went from saying that interest rates are well below neutral levels to just below. So that suggests they're going to raise interest rates in December, but they may take a break in the early part of next year. So that's new news, and when we have new news, that kind of engineers a fresh move in the market that can have legs. So we saw the U.S. dollar fall quite a bit this week, and I think that we could see continue to fall, driving the euro higher and sending it towards that 114.50, 115 level that where we have the next resistance for the currency. So keep an eye on it because we have more Eurozone data on Friday. We also have the G20 meeting this weekend. That's going to get a lot of attention because we could see if the U.S. and China reach some sort of deal, or the U.S. decides to delay the next round of tariffs, that could lead to risk-on rally that could also help the euro itself. Thank you so much.